called the double entry system. Double entry system. Alright, double entry system. Remember in the previous video, we looked at accounting equation, and I'm so happy that my learners, you understood the accounting equation. Today, let's use the same energy to understand our double system. This double entry system is a key principle in accounting which we use when we are recording our transactions. Don't forget, I told you we are still at the recording stage of accounting. So we can say this is the method of recording. Yes, don't forget we are still looking at recording part of our accounting process. Method of recording where each financial transaction is recorded twice. You see, whenever we are recording, each transaction that takes place in your business is recorded twice. Once as a debit entry, we shall see these concepts as we move on, and once as a credit entry. Yes, though I'm saying we record it twice, you don't go to debit side and then you record the same transaction. You are saying you record it once as debit and once as credit, which is really very, very important. Because if we don't understand this concept, if we don't master this concept, then it's going to be challenging. But since you are at ProAccounting Academy with Kiweewa, we are here to simplify for you accounting so that it becomes easy for all of us. Key principles here, which you need to know. Principles governing our double entry system principle. Key principles, number one, you need to know, as I have said in the definition, each transaction is recorded twice. Now, for you, when you record a transaction once, just know you are making a mistake. Each transaction must be recorded twice, or I can say at least twice. It could be even more, but the minimum will be twice. That is, we shall record on debit and even credit side of our ledger account. I'll talk you through all that. I will explain everything concerning that. Another principle, as we are looking at double entry system, you need to know, my students, that the total debit, okay, let me say total debit entries must, I'm not saying we should, right? I'm saying must equal to credit entries. You are going to see that, yes, as we are recording some transactions on debit side of the account, other transaction on the credit side of the account, we need to know at the end of the day, as we are balancing our books, the total debit must be equal to total credit. But I will not forget that you are our beginners in accounting. I have introduced to you some two concepts which are really very important in accounting. I have talked about debit and I have talked about credit. I think I need to talk about these two principles. That is debit and credit. Let's try to go through and I explain what they do mean. Let me start with debit. Debit, it is a common word you are going to see throughout. Debit, it is represented by DR, that is DR, debit entry. So whenever that is debited, it means you are putting on debit side. That is credit, means you are putting on credit side. But what does it mean? Does it mean doctor? Because someone may say DR and say maybe it means doctor. No. This is an accounting term, right? Accounting term. You see, it's not meaning doctor or what, but it's just an accounting term that indicates. What does it indicate? Could be don't forget our accounting equation, because we are building on that. On our accounting equation, we had assets there. So indicates an increase in the asset. Whenever an asset is increasing, maybe you had one machinery, then you bought another machinery, we put on the debit side of the account. We shall see that using some illustration. Or increase in expense. When an expense is increasing, we debit on our account. When an expense, which expense could be salaries and wages, could be water bills, could be transport, any form of expense, we come here and we put on the debit side of the account. We are going to see that as we move on. Or a decrease can be a decrease in, remember our accounting equation had what? Had asset, liability, and equity. Meaning, if our liability is decreasing, a decrease in liability, or can it be equity? I think that summarizes our accounting equation. We talked about asset, we talked about liability and equity. So when asset is increasing or expense, we debit that. When liability is decreasing, reducing, of course, we debit. When it is reducing, we debit. But as I have added here expense, even when an income or income, whenever income is reducing, for example, it can be in the form of sales, you have sold the goods now, whenever sales are reducing or any form of income revenue, we debit our account. So you are going to be seeing such as we move on. What you should know, it is recorded. It is recorded on debit side of the account. Now I can give you here an example. As you may be knowing that our account is represented in the form of T. Letter T is written like this, right? You know that, not this one. Don't give me small t. I'm talking about capital T. Not big, but capital T. And when you look at this T, it has two sides. This side and the other side. This side, it's called debit. Then this side, it's called credit. Now, when you look at this side, if you are standing as you are facing here, this is left side, the other one is right side. So you can say it is recorded on, not debit side, but on left side, because we are looking at debit. Here it is debit, here it is credit. So any increase in asset, any increase in expense, you record. Remember, we are looking at the recording of our financial transaction. So anything concerning increase in asset, increase in expense, decrease in liability, decrease in equity, decrease in income, we record on this side. I can give you an illustration here before I go to credit. Example. I can say, Abdi purchased maybe machinery worth Abdi purchased machinery worth $1,000. Then they ask, required, if we are trying to record is this, record the above transaction. Where? In the ledger. Of course, I will talk about ledger at a later stage. Ledger accounts. Yes, don't forget we are learning how to make recording. We don't just record like any person who doesn't have maybe knowledge concerning accounting. For us, we have principles we follow. What you should know as we are recording, we basically use what we call down entry system. Some people call it principle. And when you look at this example, we are going to use it to explain how we can debit this. using increase in asset, increase in expense, or decrease in liability or equity or income. Let's do our solution here to simplify this. Accounting becomes very easy. The moment you understand the principles, you will not force the number to balance. Of course, it will balance automatically. Some students tend to force the numbers, which we are here to solve at ProAccounting Academy. Let's do this. I told you an account can be presented in form of a T account, as you can see there. Now, when you read here, Abdi purchased this like acquired, or bought. Yeah. So purchase can refer to acquiring, can refer to buying something. So he bought machinery worth 1,000. This 1,000 can be by cash, no problem. What you should do, you start by identifying the accounts. I told you each transaction must be recorded twice. Now, once you look at this, we have to record this twice. One as debit, another as credit entry. Now, which accounts are you seeing there? I'm seeing there is machineries account, where we record whenever we are buying machines or machinery, we put on that account. So we shall use our T account, machineries account. You draw, just use your T account. No more T. Everyone knows how to write T. You can't say writing T is hard. No. Anyone can write T. But don't forget to put our abbreviations. They allow DR. Any accountant, anyone in accounting profession, once sees DR, will know that is debit entry or debit side. We will not say that is doctor. No, it is debit. Then CR, meaning credit. I'm going to talk about credit as well. Let's first understand them. Now, I said each transaction must be recorded twice. Meaning, each transaction you read here, you have to identify two accounts. One, we have identified machineries account. Another account, I am saying cash's account. Cash's account. You draw still your T to comply with that end, because you say you must record twice for each transaction. You look at this. Let's go back. Of course, we agree from our accounting equation. We saw examples of assets, and machinery was part of it. Even cash was part of it. And here we say, this is an accounting term that indicates an increase in asset. The question is, if you buy machinery, are your machinery increase or decreases? The answer is it increases. Why? Because you are acquiring, you are buying more. If you had one, now you have two. The moment you identify that the machinery or the asset is increasing, automatically you know we have to record on debit side. Because here we are saying if there is increase in asset, means what? You record on debit side. You come here. A machinery, you are increasing machinery using cash. How much? $1,000. Maybe they can give you dates, it can be first, maybe 2025. You are using cash to acquire more machinery. We are not yet done. We said each transaction must be recorded twice. Don't forget, when our asset is increasing, we debit. When it is reducing, we know even cash is an asset. If it is reducing, means we are going to put on both sides the same transaction, the same amount, same date. First, October 2025. Reducing, your cash is reducing because you are buying machinery. You bring here machinery. Machinery is in. Just write machinery. How much? The same amount you recorded it there. 1,000. We are going to see when you go to debit entry. I think this brings out what I was talking about. We said debit entry is an accounting term that indicates an increase in the asset. That's why here we are recording on debit, because our asset, this machinery, is increasing by 1,000. And decrease in asset, opposite. If asset is increasing with debit, meaning if it decreases with credit, as you see under credit entry. That's why I've recorded here cash on debit side and cash on credit side. Why? Because the principle says once an asset is increasing with debit, if it is reducing with credit. By doing this, I can tell you, my students, you have recorded this. Don't forget, we are still looking at recording part of accounting. So by doing this, we have completely recorded this transaction at that stage of recording by affecting the double entry system. However, it's not enough. I told you we have two concepts under double entry. That is, we have debit entry there and credit entry. If at all you have understood this, allow me to take you through the credit entry and we see how it works. Still, we shall use an example. You pause, you try to go through the same, try as much as you can to understand this principle of double entry because it's a governing principle which we are going to use throughout our accounting. So here we have credit entry, what we call CR. Please, starting from today, and you start use DR, CR. People in the accounting profession, they know those abbreviations. They are standard ones and they allow CR, DR. It will show you understand accounting and you can grade pass. So this one, whenever someone talks about credit entry, we are referring this is an accounting term. That indicates the moment we find any entry on credit side like this, the way you are saying here, it is an indication, indicates an increase. Don't forget our accounting equation. Our accounting equation had assets, liabilities, and equity. We said we debit if the asset is increasing, and we credit it if it is reducing the asset. But still, for liability, if liability is increasing, we credit an increase in liability or equity. You remember our accounting equation? We talked about asset, equity, and liability. So whenever it is increasing, please, you have to credit it. Not only liability and equity, even or income would be revenue. Someone would ask, what about if sales are increasing? Where do we record that? Yes, we record on credit side of the account. These are accounts I'm talking about. It is recorded. Where do you find it? CR. It is recorded on the right hand side of the account or the account. You look at this. We have two sides here. We have left side and right hand side. So we are saying this one, it is written on the right side. That's why we find our CR. The moment you do that, you will be at the right track. I think I should also give an illustration here to show you how it works. Let me give an example here. Hamda sold the goods by cash worth 2,000. Maybe it was on 7th October 2025. Required. Record the above transaction. Now we are learning how to record the transaction. Record the above transaction in the ledger account. Relevant ledger accounts. That is done. Here, they are telling you, and remember, whatever you do in business, you are selling good, you are buying an item or an asset, you have to record it. The question is how to record that transaction. This becomes very easy concerning what if you at all understand the double entry. Recording this is going to be easy. Let's try to do this. Step 1, I told you draw 2 accounts, because each transaction must be recorded twice, meaning even you must draw 2 accounts. After that, you just draw 2 T accounts the way you see here. Go back to your question. Look at this. We have Amda sold the goods. I'll talk about these concepts, but if they have not told you the goods which were sold, that takes us to sales. Maybe someone is operating a shop, and that shop there are so many goods. Could be sodas, could be water, could be what different products. When they don't specify the goods which were sold, we term that as sales. But if we say sold maybe water, we would open water's account. But given we don't know the account, the item or the good which was sold, that one we term it as our sales, and we create what we call sales account. Then another account here we can see, yes, we have this asset called the cash. They are telling me, yes, she sold it by cash. You come and create what we call cash's what? Cash's account. Having done that, step 2. The first step is to identify the accounts. We have done that. Step 2, to pick the information from what is given and you start recording. Don't forget our concepts for credit and debit entry. We said credit entry is an accounting term that indicates any increase in liability. Of course, we know sales is not a liability. Equity, sales is not an equity, but sales is an income, revenue, or sales. And we are saying if there is any increase in sales, you credit. Of course, you come here on the right-hand side of the sales account, you pick the details, could be from your receipt, from anywhere you recorded, and 2025. You made sales using the cash. Already it is showing you what you are putting here as detail must be coming from another account. You pick this cash. How much? It was $2,000. Then don't forget that this people says accounting double entry system says each transaction must be recorded twice. Here we have recorded it once on credit, meaning it must have a debit entry in another account, which is cash. You come here. Why am I going to put cash? This is an asset. The question is, why am I going to put it on the debit side? Don't forget that I said debit entry we record there if cash we are done with our sales account correctly recorded on website as our principal says concerning revenue. Now for cash, we are going to put on debit side. Why do you think we are going to put on debit side? Of course, I told you when an asset is increasing, we know cash is an asset. Don't forget, that's why we started that anything you own, and you own in cash. Cash is increasing because when you have the sales goods, cash, of course by cash is increasing. You come here, pick the same information concerning the debt, 25, from cash is increasing from where? From sale of goods, how much? 2,000. By doing that, we have completed 100% recorded our transaction correctly and complied with the principle of double entry system. So in summary, because we need, where should I put the summary? Let me put for you here so that you can easily know. And don't forget that we are still looking at the first step of accounting, that is recording. Don't skip these steps. Go through, practice. Accounting is all about practice. The moment you practice these principles, accounting is going to become easy for you. Summary here concerning double entry system or principle. Summary concerning double entry system. Two things here: debit, DR. Now, already you know I have already explained the concept of debit. Now we know debit is an accounting term, and we said it is always on left side. Left side. You see, the left side is this. That's why we have our DR. This side is the left side. This one is the right side. So it is always on left side, and we record there. Increase in assets. Don't forget our accounting equation, which has assets, or increase in expense. Expense here, even could include the purchases, as long as it's an expense. Or we can record still on that left side, the decrease will be decrease in sales, liabilities, equity, income, etc. So master that debit side of the account, those are only things we record that side. We have assets, if it is increasing, increase in expense, decrease in sales, decrease in liability, decrease in equity, or decrease in income. Then we have credit side, and I told you it is represented or abbreviated by CI. My accountants, my students, please don't forget this principle of double entry. We are going to use it right from now till the end. We shall not forget this. So you need to know this one. As we record this on left side, this one is on right side, and right side is this one. That's why we recorded the CR on this side. CR. What do you record there? Of course, we record increase. We record increase in liability. From our accounting equation, we go back. Liability, increase in equity, decrease in asset, decrease in expenses, even increase in income is on that side. So once you are on the right side of your account, just you put increase in liability, increase in equity, decrease in asset, decrease in expense, or even increase in sales, income, or revenue. That's why when our sales were increasing, as we are making sales, we recorded on credit side, because we are saying on credit side, that's where we put any increase in sales. As we move on, as we summarize this double entry, there is something I want to talk about this. Depending on where you are watching from, some of you may not be using these T accounts. It depends at the level. If you are beginners level, it's very important to start from here. But I want also to show you something. You can summarize this instead of drawing these ledger accounts. You may decide to use this table. For example, you may decide to say, instead of using the ledgers, you can just come and say, you can cash, you can put debit cash by 2,000, and you credit sales by 2,000. You can post them. Yes. You can make entries. I don't want to bring in those concepts of entries at this stage. With my beginners in accounting, I will talk about this. But for now, this is the same as this. But if now you find something like this, you may ask yourself, where do you get it from? From these key accounts, I will say. Debit cash 2000, that's what I've done. Credit sales by 2000. Even this entry is correct, but I don't want to talk about the entry here at this stage. But as we move on, I will bring in different concepts of accounting, and we see have debit balance, of course, must equal to credit. When we add, if we have maybe several transactions, we add all total debit entry and total debit credit entries, they must be equal. Thank you very much. This was double entry principle or system which we use when we are recording. You may be asking, what do they consider when they are recording? Why is this number balancing, or why is it failing to balance? The moment you find such a challenge, just know you did not understand the key concepts and principles of accounting, including double entry. But the moment you keep yourself with ProAccounting Academy, we shall break for you, we shall simplify accounting for you, we shall make sure everything becomes easy for beginners in accounting, even those who are already in the profession. Don't forget to subscribe for new videos. We shall be giving you notifications. Subscribe with ProAccounting. You can share and like. Thank you very much. See you again.